Hello everyone, in today's video we will talk about the dragonfly doji pattern. The dragonfly doji is a bullish candlestick pattern which is formed when the open high and close are the same or about the same price. What characterizes the dragonfly doji is long lower tail that shows the resistance of buyers and their attempt to push the market up. See the example on your screen. The illustrations on your screen is a perfect dragonfly doji. The long lower tail suggests that the forces of supply and demand are nearing the balance and that directions of the trend may be nearing a major turning point. See the example on your screen. In the chart on screen, the market was teasing the previous support level that caused a strong rejection from the area. The formation of dragonfly doji, which long lower tail, shows that there is a high buying pressure in the area. If you can identify this candlestick pattern on your chart, it will help you visually see what the support and demand are located. When it occurs in downtrend, it's interpreted as a bullish reversal signal. As I always say, you can't trade candlestick pattern alone. You will need other indicators and tool to determine high possibility probability dragonfly doji signals in the market.